Joining us now is Dan Primack. Dan, it's great to see you. Busy day, surprisingly busy day. Who else is ripe for a takeover at what Dom points out? A lot of these were low valuation levels, so there's got to be no shortage of candidates in that sense.
Yeah, I think Weber is maybe the most interesting one because Weber, as you said, went public just last summer of 21. And there's all these companies that went public in 2020, 2021, maybe a little bit at the beginning of this year. And a lot of them are ripe for takeovers because they are just trading so poorly. And you've got an enormous amount of private equity money sitting on the sidelines trying to do deals. It's hard for some of those private equity firms to get debt, but Thoma Bravo does it today with Coupa and continues being able to bring tech companies private. So I think if you see a company that went public in the last, 24, 36 months, and its stock is really dragging, maybe even below the IPO price, that's a company that if it isn't talking about going private, private equity firms are at least thinking about making an ask.
Dan, it's Dom. One of the things, to Kelly's point, if you look at the charts, Weber has been such a short public stint as a company, about a year and a half or so. But you look at Coupa, during the pandemic highs, this was a $370-some stock, and it's going to get taken out at 81. And then if you take a look at Horizon, the day before some of those headlines first came out that there was interest in kind of buying the company, them selling themselves out, maybe to Sanofi, maybe to Amgen, maybe to Janssen, which is Johnson & Johnson, that stock was closer to $79. If that's the situation, shareholders at these takeover companies are agreeing to get taken over at these relatively low levels. What does that say about sentiment right now among investors?
Well, I think Horizon's still a pretty good premium, particularly to where it was trading back in, as you said, late November before they had to announce. They're a little tricky. They're a Irish company, and Irish law means when they get approaches, they actually have to announce them. So that's why there was that little weird thing. And it's a different situation because Amgen apparently decided it wanted to get into rare orphan drugs. And so that's kind of a one-off. For the rest of them, though, I think it is investors acknowledging that there was a massive bubble. There was a huge tech bubble. And there comes a point where, you don't want to, there comes a point where people kind of want to cut their losses and get out, or willing to, if somebody's offering a premium to where it was a month or two ago, not thinking it's going to get back up to those pandemic level highs.
So, Dan, now we also face a 2023 environment of tremendous macro uncertainty. How do you think that's likely to factor in here?
I think, well, again, you have a huge amount of private capital, some strategic, obviously, Amgen buying, Amgen's a strategic, but you have this huge amount of private equity capital, and they're not under enormous pressure to spend it right now, but they do have a lot of money, and I think they are going to go bargain hunting, particularly for, we've heard a lot over the last couple of years about how a lot of these tech businesses were, quote, real companies, right? The idea was these weren't .com sorts of things, these were real businesses. In a lot of cases, that's true. There is cash flow. There is real revenue. And I think private equity is going to go really bargain hunting in the first half of this year. And to Dom's point, I think a lot of shareholders are going to say, thank you. This isn't what we wanted. We're possibly taking a loss depending on when we got in, but it's not the loss we had started to bake in for ourselves. And look, and I think also I'd say the last thing is there is a general belief, I think, within the business world that we might have hit a bit of a nadir when it comes to some of these some of the economic trends. Not that we're going to have a massive recovery next year, anything close. Could be a technical recession, but nonetheless that we're not going far deeper down.
So, Dan, you mentioned kind of this notion that there could be this at least acknowledgement, maybe even throwing in the towel is too strong a way to put it, for some investors that the valuations were too high before. I wonder what industries or sectors out there then that you would be tracking for where we could see some of those private equity deals emerge. Would it be in certain places like in, say, industrials or utilities, or is it more towards the energy market? Or are all the beaten up names worth doing still pretty much in technology, media, and telecom?
I still think technology, media, and telecom, that's the sector that's gotten beaten up the most and has the most issuers who are relatively immature as public companies. You look at the things that, the Thoma Bravos, the Vistas, the Silver Lakes keep buying. You've got a lot of enterprise SaaS businesses. Just think of, it felt like there was a period of time, Dom, in 2021, where there was like 5 enterprise SaaS companies going public every single week. A lot of those are underwater, and that's where I'd be focusing. That's where I think you'll see a lot of takeover activity.
All right, Dan Primack over at Axios. Thank you very much, sir. We appreciate it.